Look, this week has been orchestrated. It's been orchestrated. It's been choreographed, no matter how you slice it. Jerome Powell comes on stage. After that, the first paper that comes out of the gate at the Chicago Fed conference is from a Harvard economist who says that the last time we had a downturn, had we only had negative 5% interest rates, things would have been that much better, in addition to QE. The stage has been set. Yesterday, before John Williams spoke, the Wall Street Journal hit with a story that said a June rate cuts
You went right to where I was going to go with this, because
these are not. There's no such thing as coincidence. There isn't. You don't have a headline that says it might be June. It is possibly going to be June, especially if this morning's number is weak.
Yeah, you know
Bring
what?
it in.
That's what I was going to do.
And markets will celebrate.
I was thinking about, okay, so Danielle, you're so smart and so great. I was like, how can I make this interesting? Because you make it interesting. And I was like, this is what I thought. You know, I love the Wall Street Journal. They do great reporting. I thought this is like the Fed sources to the Wall Street Journal reporter. Here you go.
Yeah.
We might, you know what I mean? Yeah. I feel like the
that
story.
Challenger number was really weak.
Was the story
Maybe June's
like a
on
plant?
The table.
Was it a plant?
It feels like it. And it's a matter of public knowledge because it's in my book. But they have always had a very cozy relationship with the Wall Street Journal. I'm not saying anything out of hand. And I don't think it was coincidence at all that story hit when it did, saying that policymakers are discussing June as a possible.
How about this?
It is what it is.
Do we need a rate cut?
How about this? What are the markets going to do, given what they have done this week, if they don't get the rate cut? We've got 3 rate cuts priced in.
But do we have to get a cut in June?
I think so.
There's many more meetings this year. If we don't get a cut in June, does the market sell off?
Thanks be to God, we go into Fed blackout on Monday. Just be quiet already. So we go into Fed blackout. What if the market prices in a 50%? We're not far. We're like a 33% chance of a rate cut in June. What if we get up to 50% while they're in blackout and they can't say anything by June the 19th? What do? They defy markets? They defied markets in December. How did that work out for them? Not very well. So, and I think that they have laid the groundwork. They did it in Chicago. Clarida kind of confirmed it. And I think that they are ready to go. The problem is...
I'm going to ask it again. Do we need a rate cut?
Well, you know, 11 months of increasing layoffs, and they've moved from retail Armageddon into the biggest job-cutting sector in May was in technology, and then followed by industrials and automotive. We've had
high-paying jobs.
3 months of consecutive auto production cuts. All of 2018 saw retail sales in autos decline. May, 4% year-over-year declines in retail auto sales. They're propping up the number with fleet. The American consumer is telling you we need a rate cut.
But is lower rates going to solve that problem?
No, of course not.
Is it going to set the economy on fire?
It wasn't the price of money in 2000. The worry is that when you've got Neiman Marcus pricing a junk bond at 97 cents on the dollar, which, by the way, they're supposed to price at 100 last I checked, and then it trades the next day down to 86 cents on the dollar, and you get junk bond issuance slamming to a shut, then they come out of the gate at this big conference in Chicago and start talking about rate cut, rate cut, rate cut.
Is the Fed going to do Trump's bidding?
It's not about that. It's about bond market liquidity.
Are you sure?
I'm very positive, but it will look like they are.